You're very welcome to this ISIF webinar this afternoon. We'll be giving an update on ISIF fund performance and also on the progress we've made with the Pandemic Stabilization and Recovery Fund. My name is Paul Saunders. I'm a Senior Investment Director in ISIF, and I'll be hosting the call today. I'm delighted to say we have over 760 people registered for the call today. We will be recording the webinar and it will be posted onto our website in the coming days. So the webinar is due to run until about 3:45. We will start with a welcome from Conor O'Kelly, Chief Executive of the Ncma, followed by presentations from members of the ISIP leadership team, and then finally we'll wrap up with some Q&A. So to kick things off, I'd like to introduce the Ncma Chief Executive, Conor O'Kelly, to give his introductory remarks. Thank you.
I've been thinking a lot recently about Mario Draghi. In fact, I've got a picture of him on the wall of my office, which must make me the only Irish public servant with a picture of an Italian politician on their wall. In 2012, when he uttered his famous line, "Whatever it takes," the Department of Finance were forecasting that Ireland's annual interest bill was set to rise to 10 billion euro. Today, it stands at 4 billion euro. So maybe you can see why I have a picture of Super Mario on my wall. I was fortunate enough to hear him speak live about 18 months ago, and he told a joke about somebody needing a heart transplant, and the surgeon was giving a couple of options. And he said, "I could give you the heart of a 5-year-old boy," and the patient said, "No, too young." "What about a 45-year-old investment banker?" "No, they don't have a heart." "What about a 75-year-old central banker?" "Oh yes, I'll take that." Why would you take a 75-year-old central banker? Because that's a heart that's never been used. And there's no doubt he is a cool customer, and he's going to need all of that in the coming months. So I think I might keep the picture on the wall for the time being. He also said recently that for the world's economies to work smoothly, two things have to flow freely: money and people. 10 years ago, money stopped flowing freely, and today in the pandemic, people have stopped flowing freely. 10 years ago, with money stopping flowing, central banks pulled every monetary policy lever available to them and invented some new ones. Today, we need all of those tools again, but it's not enough. We need to pull on the fiscal levers as well. And that's what Ireland has done with the first counter-cyclical fiscal response in the history of the state. Now, this fiscal response, this spending, will be financed 100% through borrowing. Our debt levels are set to increase from 200 billion to 250 billion, about a 25% increase. But in the Ncma, we are very comfortable that these higher levels of debt are sustainable. I get asked a lot recently, "Conor, what about the burden on future generations?" And I say, what burden? The interest bill has fallen from 7.5 billion to 4 billion in the last 4 to 5 years. We're borrowing at 0% or often in negative interest rates. Our interest bill at 4 billion is twice what it was in the mid-1980s, and our government revenue is 10 times what it was. Of course, there is refinancing risk ultimately, but that refinancing risk is for all of the European countries together. And I think the fact that we will all need to refinance together all but guarantees that European institutions will create an environment to allow that to happen smoothly. What the ECB is doing at the moment is quite extraordinary. Budget deficits in 2020 across all European sovereigns are likely to total €1 trillion. In 2021, they won't be far off that again. The ECB has expanded its bond buying programs to essentially match that entire new issuance. They're effectively buying our bonds one for one. And when you consider that the increase in domestic savings, it's arguable that we're in even a more favorable position. Now, we're in decent condition in terms of our own refinancing requirements. We've had 70 billion in refinancings to do over the last 4 years. We only have 28 billion in the next 4 years. We have one of the longest maturities in Europe. So from a technical position, we're in quite good shape. Those of you who followed us over the years, you've heard us talk about our worries about Ireland's national debt. 4 to 5 years ago, we talked about Ireland's mountain of debt, the 7.5 billion interest bill, the refinancings that were ahead of us. We talked about making our way down that debt mountain slowly. Interest rates at this level have, of course, allowed us to make more progress than we ever thought possible. Some of you may have heard me last year in the convention centre saying that we'd made so much progress down the mountain that we could almost see the bottom. And there's no doubt this improvement in our debt position allowed the government and the policymakers and the minister to pull so hard on the fiscal lever when we needed to. And of course, we'll have to get back there again at some point. But the ECB is giving us maybe something more important than low interest rates. They're giving us time to ultimately get back to where we need to. Because for Ireland, it's not a question of whether there's going to be an economic shock in the future. The question is more, what kind of shape are you going to be in when it happens? Thankfully, this time, from a debt point of view, we were in good shape when the crisis hit, and that allowed the policymakers to take a 100-year response to a 100-year event. In terms of the PSRF and the ISIF, which Paul touched on, the PSRF was set up in May, a 2 billion fund, which the team will talk about. We've committed over 430 million to investments so far, and there's about 600 million in the pipeline. You won't be surprised to hear about the sectors that we're mostly concentrating on. But today, in addition to that, we're announcing ISIF's returns for 2020. And I'm delighted to say we're recording a return on the fund of 6.2% for the year, an investment gain of over 500 million on our total fund size now of 8.6 billion. Total investment gains since the start of the fund 6 years ago are now 1.5 billion, but 500 million of that recorded in this year alone. So what have been the drivers of this performance? Because when you put it in context of what other markets have done, it really is an exceptional performance. You'll all know, you're also familiar with what markets have done. You all know the Euro Stoxx 600 index, for example, was down 4% in 2020. The ISIC was up 2.5%. The DAX was up 3%. The CAC was down 7%. The FTSE was down 14%. The S&P was up 16%, but that's in dollar terms. And of course, interest rates were zero or negative. So in that environment, you know, it's a very strong performance. The drivers, the majority of the performance has come from less than 20% of the portfolio. And a lot of that is our strategy of investing in overseas international venture capital and private equity managers, some of the best managers in the world. We're getting access to their fund management capability. In exchange for us investing in those funds, we asked them to commit to Ireland in a number of ways. We asked them to put boots on the ground, open an office in Ireland, to bring their expertise, their specialist knowledge to our sectors that they're involved in, and to commit to invest at least the amount that we invest in the fund in Irish companies over the lifetime of the fund. So if somebody's raising a 500 million fund and we invest 50 million, we expect 50 million to be invested in Irish companies over the period. And there's some countless examples of that. They really have done what we've asked them to do. There are so many examples. You've got Finisterre, the specialist ag tech fund, investing in APIS project in Cork, Fiona Edwards-Murphy's company, which looks at the health of beehives, monitoring them remotely. We've had Motive, which is a fintech specialist, investing in the Clonakilty-based Global Shares. Leeds Private Equity, an online educational specialist for the last 2 decades, investing in Interactive, the Dublin-based, Leopardstown-based regulatory compliance training company. We've seen the well-known fund, Insight private equity fund, backing some of our high-growth stories, AMCS and Fenergo, and countless others. And of course, we're investors in some of these managers on the other side, and in a year where they're very exposed to some of the cutting-edge technology, whether it's fintech or health tech or ag tech, they're at the cutting edge of most of these technologies. And in a year where we've seen the acceleration of the digitization of society, the digital revolution, if you like, those funds have produced some outsized returns, and we have been the beneficiary of that. I know many of these funds that we invest in are on this call today, and I want to, first of all, congratulate you on some great returns, but more than that, to thank you for honoring your commitment to the other side of the bargain, and becoming such a critical part of the Irish infrastructure. These are funds that likely, without ISIF's involvement, may have flown over Ireland at 30,000 feet. Instead, you've landed here on the ground and made such an impact and become such a critical part of our system. A lot of our investee companies are also on this call, and I want to thank you for your continued extraordinary partnership and work, particularly this year, and to say to you that we are here to back you, to help you not only survive this pandemic, but to thrive long into the future. So thank you very much, and I hope you enjoy the rest of the session, and I hope to see you in person again very soon. Thank you.
Many thanks, Conor. So I'd like to briefly run through the agenda for today's webinar. In a couple of moments, we're going to kick off with Kieran Bristow, Senior Investment Director in ISIF, who's going to give us an overview of the fund performance for 2020. We'll then hear from Saoirse O'Connor, who's Head of Irish Portfolio Monitoring, who's going to talk more about the PSRF pipeline and also give you some insights and observations we have from the contact we've had with companies in Ireland over the last 12 months and the impact that the pandemic has had. And then finally, Donal Murphy, Senior Investment Director, is going to talk about investments we've been making to support the recovery in the area of strategic infrastructure, with a particular focus on ISIF's regional investment agenda. Following that, we will end up with some Q&A, assume we have some time. That'll be based on questions submitted ahead of time, and you should see functionality on your screens to submit questions as we go along. So without further ado, I'd like to hand over to Kieran, Senior Investment Director in ISIF. Thank you.
Thanks very much, Paul. I'd like to start today by taking an overview of ISIF and the various channels by which we deploy our capital. First of all, I'd like to remind you that we have a dual mandate, which is to invest on a commercial basis and also to support economic activity and employment in Ireland. So if we look at the slide here, we'll see that we started out with 10.1 billion and we actually set up a rainy day fund, which we allocated 1.5 billion to, and that was during the year that was transferred to the Minister for Finance. Our discretionary portfolio, therefore, has ended the year at 8.6 billion, and with three broad channels here. The first is with 4.6 billion in what we call our Irish portfolio, and these were projects and companies that we invested in prior to the setting up of the pandemic fund. Secondly, as Conor has already said, we've allocated 2 billion to the Pandemic Stabilization and Recovery Fund, as we call it, and I'll be covering that in more detail in a minute or two. And finally, we've allocated 2 billion to the LDA and HIPFI, which are two parts of the government's policy on residential property. And that's in addition to just over 900 million that we've allocated as part of the Irish portfolio to residential property. I'd like to turn now to look at the ISIF performance and continue some of the themes that Conor mentioned. Here we have all the numbers in terms of performance and value added. I'd like to focus firstly on the Irish portfolio, which has returned over 7.5% per annum since inception, i.e. the last 6 years, and that's resulted in an added value of 900 million euros. Adding to that, the added value from the global portfolio of 600 million, that gives us a total added value of 1.5 billion since inception, and essentially the same as the rainy day fund, so that the gains covered the transfer there. We've made 20 investments in 2020 and bring our total commitment to 5 billion euros over 140 investments. This is magnified by the co-investment we've managed to garner of 8.6 billion and has magnified the impact that the ISIF portfolio has had on the Irish economy. In addition, much of that gain has been returned in the form of dividends, coupons and realizations, further enhancing the impact we can have on the economy and in Irish investments. I'd like to turn now to talk about the second part of our mandate, the economic impact. and highlight a number of the measures here. We survey our investees every 6 months, and this is taken from the middle of 2020. We're supporting almost 30,000 jobs with our investments, which paying wages of almost 420 million. I highlight these because it's particularly important during the pandemic, when so many people have lost their jobs or are on assistance of some sort. This employment is spread across the country, with 56% of it outside Dublin. Again, similar to the investment return, with long-term added economic impact here, and even when we exit a company, that impact continues as the jobs continue to be supported by the companies. I'd like to turn now to my last slide and discuss in a bit more detail the PSRF. It has 5 aspects to it. The first is what we call stabilization, and this is where we are looking to support medium and large companies that have been severely impacted by the pandemic, and where we can stabilize the company and the system during this difficult time. The second area is where there is some ability to respond to COVID. So, for example, this might be testing or the like. The third is in the area of indirect investments. We invest in a number of platforms which support smaller companies, venture capital, private equity, SMEs, either through lending, loans or equity. The fourth area is continuous support for our existing investments. I mentioned previously that we had over 4 billion invested or committed prior to the PSRF, and we'd like to continue to support those businesses. And finally, what we call recovery investments. So these are companies and entities where they manage and are likely to be able to support themselves during COVID, but may not have access to the capital markets to help them drive through recovery and support the recovery in Ireland. So there's a number of different areas where the PSRF can support you or your clients. Thank you very much. I'd like to hand over to Saoirse now, please.
Hi and welcome. My name is Saoirse O'Connor, and if you're not familiar with me, I'm the head of the Irish Portfolio Monitoring. In our team, we manage over 100 investments. And in ISIF, we really invest through 2 main methods. It's the direct investment and the platform method. About 75% of our investments go through platforms, and 25% by number, we do direct investments, either debt, equity, and we take board positions where necessary. So through that, we have a wide exposure to all sectors, and some of them are listed down there. We have residential, regional, renewables, enabling, manufacturing, pharma, you name it, we're in there. And through that, I suppose, we have a wide exposure to the Irish economy, and we were able to see over the last 12 months through our engagement, both direct with our companies and also with our fund managers, what the impact was the pandemic was having on the Irish economy and market. If you then couple it with the PSRF, we were able to see what sectors and what companies were looking to engage with us and what were being directly impacted. It gives us a unique position within the market to see the impact on the pandemic. So my next slide is really going to look at, I suppose, the observations and what we saw engaging with those 100 plus fund managers and direct investments. And while we can talk about a lot of observations, I've tried to really distill it down into 3 factors or 3 observations that I would have seen it. So first of all, it was the quality of management. What we saw throughout 2020 was that our investment companies really faced difficult trading conditions. But what they did really well was react quickly. They invoked their business continuity plans, they cut costs, they reduced spend, and they engaged with their lenders to conserve cash. And they did this early on in the pandemic. We saw this happen in Q1 and Q2. And I suppose a result of these actions, and combined with the government supports and grants, meant that for a lot of investee companies, they actually ended up at the end of the year in a better position than they would have expected at the beginning of the year, in terms of surpassing their revised COVID budgets. Some of them had better cash positions or EBITDA margins. And for some of our pre-profit companies, we actually saw, because of the focus on costs, that they now expect to reach cash break-even point earlier than they would have originally planned. I'm going to move now onto the funds. And what we see here, again, looking at the quality of management, ISIF invests alongside strong co-investors and fund managers, which all came to the fore in 2020. Initially, ourselves and the fund managers would have had concerns that maybe limited partners would not be able to follow their commitments, but we didn't see that happen. And really key to the fund managers that we were working with was making sure there was adequate reserves and working with the companies to manage through 2020. There was a number of impacts we saw. We saw reduced growth in the portfolio companies, and this had knock-on timing effects for any potential exits. It meant that later vintage funds had to be extended in terms of the maturity, and the limited reserves that were left within the funds had to be managed extremely well. What we saw was the second half of the year, markets improved, and we saw some portfolio exits within our funds start to complete. In our life science funds, we've seen the impact of COVID-19 on clinical trial programs and milestones, as access to clinical settings were restricted. And this will have a knock-on impact on growth plans by at least 12 months as they look to get back into their clinical trials and hospital settings once the vaccinations and the impact of COVID starts to dissipate. Another impact we saw within the funds was on funds who were still within their investment periods. And some of those fund managers made strategic decisions to reduce the planned number of investments and concentrate on their existing portfolios and hold back and make sure they had adequate reserves to support their existing investee companies. And through all this, the funds, whether it was SME or VC, they could see opportunities and the need for additional funding and the need for follow-on funds to meet that financing need, which we handled through our PSRF, and you'll see that in the next slide. The last one was the sectoral impact. And I think it was touched on both by Conor and Kieran, that while we had, I suppose, a broad exposure, what we had was a limited exposure probably to transport and aviation and in the hospitality sector, which became quite clear that they were going to be hit. But when we look back at, I suppose, our main investments that we have in our sectors, a lot of, I suppose, the predictions at the beginning of COVID didn't turn out to happen. So our housing investments have continued to perform despite the downturn, despite the lockdowns. The majority of our investments are within the first-time buyers and mid-range family homes. We saw during the current lockdown and the previous lockdowns that housing sales have continued to complete and sales have continued. Our investee companies have sold over 4,000 houses and with another 5,000 units in construction. Likewise, in our PRS platforms, we've seen rental yields and occupancy remain stable. Payments have continued. And despite initial concerns around funding, similar to the limited partners, we've seen forward funding continue and funding not being restricted. We have seen a slowdown in office leasing, which is well known. Our regionals have done okay. Dublin's been a bit slower, but we expect that to pick up at the end of this year. And I suppose a key point for us was we saw as the market adopted and embraced known technology and used it, we've seen increased tech IPOs and valuation multiples increase within the States. And this has positively impacted our Irish companies and sectors. And we've seen that especially in the educational online. We've seen it in the gaming sector, fintech, SaaS, and our online retail sectors, which our portfolio companies would have exposure to. Finally, I think, which is similar to, I think, Conor's point at the very beginning in his introduction, within ISIF, we've always paid great attention to leverage and capital structure. And this means we're in a better position than we would have been last time around in the global financial crisis. And while leverage has increased, it hasn't impacted the investee companies as much as you would have expected. And Combined with this and the, I suppose, payment breaks that we would have seen last year, either by ourselves or SME funds or other lenders to our investee companies, we have seen our companies be able to plan and perform. So finally, we'll look at the PSRF, and really this is an outcome of the sectors and I suppose the impact that we've seen. And not surprisingly, we've seen hospitality and aviation be hit the worst, and they haven't been able to adapt as their customer numbers were materially impacted and lockdowns occurred. So ISIF has invested directly to support these sectors most affected, and you see that with Stay City, Aer Lingus and DAA, and has provided funding there to be able to give them, I suppose, space and time until the sectors return. We've also seen the need for financing to SMEs, and through Finance Ireland and our indirect platforms, we've also provided over 130, 140 million to those platforms to be able to reach further through into those SMEs. And the last strand is recovery and our priority themes, and we continue to invest and support the Irish economy through our direct involvement and investment into companies such as Urban Volt, Fire, Greystones and Shamrock. So thank you very much for your time, and I'll pass it on to Donald, who will go through one of these themes, the regional.
Good afternoon all. Most of the presentation today has been updating on ISIF's performance and activities and in particular historic and performance during 2020. I'm going to take a slightly more forward-looking perspective and discuss our pipeline and areas of focus within that, and expand on one of those being our regional strategy. Paul will close out with some related comments. During 2020, as outlined, much of the focus of our human and capital resources was on the stabilisation element of the PSRF. It's clear from the deals closed that within this, as Saoirse and others have outlined, there was a fair degree of sectoral and indeed sub-sectoral focus, perhaps more than anybody may have considered back in April and May when we set out on the PSRF journey. We remain absolutely committed to continue to support these pandemic impacted sectors and businesses that require stabilisation investments, in particular in light of the ongoing and what now looks like potentially increased travel and hospitality restrictions through Q1 2021 at least. However, towards the back end of 2021 and now of 2020 and now into 2021, we have started to pivot towards the recovery, the OR element of the PSRF mandate, and how ISIF may best support the re-emergence of the economy post the pandemic. In doing this, we are focusing in particular on the priority investment themes where ISIF has been most active and which many of you on the call will be very familiar, namely the regions, supporting Indigenous companies, climate action, housing, and mitigating Brexit impact. These priority themes will underpin our recovery-based investments during 2021. Within these themes, I'd like to briefly update you on our regional development strategy, and in particular the element of that strategy which we call enabling the regions. In other words, how we can make commercial investments which drive balanced growth across the country, and within that ensure people can live and work in the right places. ISIF investments in the regions are aligned with the goals of Project Ireland 2040, both the National Planning Framework and the National Development Plan. They align with the compact growth objectives of our regional cities and major towns, and will support infrastructural development that will enhance connectivity to and within the regions. We highlight here a few of our investments. The Abbey Quarter Regeneration Project, in partnership with Kilkenny County Council on the former Smithwick's Brewery site, is the first. We're delighted to report, as the picture demonstrates, that the first office building in this exciting project will be completed and occupied in 2021, with further developments on the site to follow. We've also signed an MOU with the Port of Cork Company for the regeneration and redevelopment of the strategic landmark site at Tivoli into a new city neighbourhood once the port has moved to its new base in Ringaskiddy. This will combine residential and commercial development on a transformative and regionally significant scale. This is a long-term project where ISIF will play a key enabling role, and then seek to crowd in private sector commercial investors for individual elements of the project. These are just two of a range of other pipeline projects at early stage, where the projects will focus on the regeneration and repurposing of brownfield sites, facilitating compact growth in our regional cities and major towns. During Q4 of 2020, HISCO was also formally launched. HISCO was our innovative new joint venture with Cork County Council, under which early stage enabling infrastructure for housing development will be provided on fully commercial terms. This is based on ISIF's work on the Cherrywood site in Dublin, where ISIF funded infrastructure has been built out to enable over 4,000 residential units. HISCO's early stage project pipeline is in Cork County, but with a strong aspiration to expand nationwide in due course. And finally, here's a cross-section of our other regional investments. ISIF's long-term and patient approach to these investments provides a unique level of regional additionality, investing earlier and for longer than typical private sector investors, yet maintaining commercial rigor, developing flexible and innovative investment structures, and bringing consistency of governance and overall approach. ISIF intends to further ramp up its regional engagement as COVID restrictions are lifted, and looks forward to developing and maintaining fruitful partnerships with key stakeholders, both public and private sector, across our regions. And with that, I'll hand you back to Paul.
Great. Thank you very much, Donal. So now just a few final comments as we look forward to 2021. As you've heard, we've spent much of the last year really focused on the stabilization part of the PSRF mandate. But looking forward, we do see some positive indicators. We would characterize a significant chunk of our pipeline now as being oriented towards recovery. And then also, based on a business sentiment survey that ISIF conducts, we see the majority of companies have either a neutral or a positive outlook looking forward. So there are some signs, I think, for perhaps very cautious optimism going forward. We have a very strong pipeline, about 600 million, which is roughly oriented 2/3 towards recovery, 1/3 still we would class as stabilization type investments. And in the sectors, many in the sectors that you might expect. Aviation, tourism, and so on, hospitality, still feeling the pain of the last 12 months. Funds will continue to be a very important part of our pipeline going forward, both the venture funds, private equity funds, the debt funds. They're an extremely effective way of ISIF deploying capital into the market and getting specialist skills to bear in the Irish economy, as Conor referred to earlier. So as we look further forward again, we see something of a return towards our long-term strategic objectives and our priority themes that Donal mentioned. Regional development will continue to be a significant focus, and Donal's led you through some examples of that. We have a housing programme of investment that is forecast to deliver over 15,000 units. Indigenous businesses, of course, will continue to be a significant focus, and we have 1.9 billion committed directly and indirectly to Indigenous businesses currently. And then finally, climate, which is one of the areas I'm responsible for, is going to continue to be a really important part of our investment agenda. We have 365 million committed to projects to date. We have an extremely ambitious strategy in this area, which is aligned with the Climate Action Plan. We're going to invest across the spectrum from new technologies and business models right the way through to sustainable infra to help Ireland deliver on its targets in both the 2030 and 2050 timeframes. So hopefully that's given a good flavour of the progress the fund has been making over the last 12 months. We know there are probably many questions. We see a few coming in now. So I'd like to now move to Q&A, and I'll just advance to that. Thanks very much. And so we're also now joined by Fergal McAlevey, Senior Investment Director in ISIF, to field some of the questions that are coming through. So the first one I'm going to point towards Donal, if I may. And that's a comment saying that I see there are only 4 large companies invested in under the PSRF mandate in the chart. And can you comment on why those 4, and did we see many more companies come into us?
Yeah, thanks, Paul. That's an insightful question. So I think an element of the response to that is probably a little bit of repetition from what Saoirse and others said in terms of the sectoral focus. I think when we geared up internally last April and May, when we look back on it, really nobody in society, nobody in the economy, nobody in business knew really what sectors were going to be impacted. So we geared ourselves up in terms of team and resources and structure and process to deal with something that was potentially going to be more all-consuming. And as thankfully we all saw, there was many sectors which were not materially impacted other than at a practical level, and a lot of the focus was on a small number of sectors. Within that, obviously, the fund is focused under its mandate on large companies. Obviously, we have investment platforms that Saoirse identified that dealt with the medium and smaller sized entities, and many of those larger companies were able to tap into other sources of support, as is from commercial investment, government supports, bank forbearance, indeed many things like landlord forbearance, which kicked in during 2020. So many of that saw a lot of the companies we did engage with see themselves through the stabilisation period. So that explains maybe why it's a smaller number than even we had originally anticipated. But I think it's fair to say we don't consider our job to be done. We continue to engage with many of those companies, and we also potentially expect to see other companies coming and talking to us during 2021 as the impact of ongoing lockdown and restrictions kicks in.
Great. Thanks very much, Donal. The next question I'm going to steer towards Fergal, if I may. What's ISIF's approach been in 2020 towards supporting Indigenous companies? And I think pieces of this have been scattered through the presentation, but you might talk to that specifically, Fergal. Thank you.
Yeah, I guess, thanks, Paul. I guess, coming into this crisis, unlike the last time round, there was a lack of availability of capital in Ireland, and Ireland probably, went downhill for a couple of years because of the lack of investment capital available to Indigenous companies. But I guess we come into this with a very strong position. We've mentioned 1.9 billion of capital committed to funds in the space, of which 1.2 billion of those were still actively investing in Ireland. And then furthermore, we invested in a range of other platforms and direct investments during 2020, as opposed to fill at that complement of where we felt there was gaps in the marketplace. Our funds who were here, Conor maybe had referenced earlier, had done a good job and needed additional capital. So I think we invested in 6 funds in venture and private equity to the tune of over 100 million. We invested in 3 platforms to the tune of around 35 million, and we also invested in 4 companies. So I think our strategy has been good in that sense that we had a good benchmark of companies and funds coming into the crisis. They were all actively investing during the crisis, and we topped that up then with extra funds. We felt that where there was gaps in the going to emerge in the marketplace.
Great, thanks very much. Next question, I'll try and spread these around a bit. Kieran, if I may, performance in 2020 was clearly strong. Did you take advantage of stress conditions to get better terms from investees?
Thanks, Paul. Well, as people are aware, we look to get a commercial return on our capital and really benchmark ourselves against where the market is. And while there were while the conditions were stressed, we have to remember, as Conor mentioned, that huge amounts of capital was circling around the global economy and pushing interest rates down below zero. So in many ways, we just copied that and just accessed the return that was available compared to global markets. So there was no extra return or margin added on because of any stress conditions in Ireland.
Great, thank you. Maybe chance for 1 or 2 more. Donal again, what else do you do in the regions other than urban, region and infra projects? Can you talk about other regional activity, please?
Yeah, conscious that that presentation was, shall we say, bricks and all we do. Just thinking about Fergal's earlier conversation, clearly, a decent number of our Indigenous investments would be in the regions. I think that the jobs numbers earlier in Kieran's presentation reflected that, with over 50% in the regions. And we have and continue to make both direct and indirect, and indeed some of our indirect platforms are targeted specifically at the regions in terms of making investments, be it debt or equity, to support Indigenous companies. Within that, our food and agri business, obviously by dint of the nature of the business, would have a heavy focus on the regions, and we also look to see where we can, how we can target investments in the FDI space that are regionally focused, as distinct from Dublin focused. So really, it's across the whole spectrum, but particular focus on the enabling and the Indigenous companies and FDI in the regions.
Great, thanks. Thank you, Donald. And so I think we have time for one more question. Kieran, again, what's the view in terms of the future need for PSRF, or the requirement for the PSRF funding going forward? Can you a couple of comments on that, please?
Certainly. So, as I mentioned in my shown on my side, there's 5 facets to our pandemic fund, both stabilization and recovery included. So, obviously, we're not through it yet. Maybe there'll be more companies that need our assistance in stabilization, and I think certainly, as a number of people mentioned earlier, if you look at our pipeline, there's quite a number of companies that we put in more in the recovery basket. So I think they will be working on the PSRF and related investments for a while yet, I think. Great.
Thank you. Well, I'm sorry to say we're now pushing up against our targeted finishing time, so I don't want to keep you longer than I said I would. As I said earlier, we're going to be posting a recording of today's session to our website, so if you think it may be of interest to others, please let them know. And we'll also be posting a series of podcasts and videos to website and social media over the coming weeks and months that will showcase key investments and partnerships that we have as we embark on a more regular program of engagement with stakeholders in the market going forward. In the meantime, if you'd like to get in touch with us, please do so on info@isif.ie. And I'd like to close by saying thank you all for attending, and we look forward to working with you all to deliver on the objectives of ISIF and hopefully making a positive contribution to the recovery of the economy. Thank you very much, and I'm sure we'll be talking soon.